How's it going, everyone? It's Sam. Bitcoin is about to hit escape velocity, and Ethereum just got updated. Some S1s just got updated or amended, and it looks like the Ethereum ETFs will be approved. I want to explain, though, what Fidelity had to change, what the other big institutions had to change that some people don't like, right? So we're going to go through why the market's up so much right now. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this as soon as I make them. Even if I record one time and no sound gets picked up, I'm going to make another recording because that's what I do here. No matter how many times this Yeti microphone won't work, I'll continue to update you. That's just what happened just now, unfortunately. But we'll go back through what's happening in the market. Again, if you want to trade cryptocurrency, I know I say this a lot, but you can check out the links underneath the video to Marjax or to Blowfin or to CoinW as well. They allow you to trade cryptocurrencies without having to KYC, so you don't have to tell everyone how much crypto you have and your name, right? So in case there ever is some kind of data breach, which happens with every single company out there, it seems like, they won't have all your personal information. So definitely check this out underneath the video. You can start trading here today. And that's something that I've been doing. I know I've said that several times, but when we were down here, I was talking about going and putting some longs in, and those are definitely doing well right now. As you can see from the bottom to the peak now, we have moved up 27%. And that feels really nice because we did take a pretty large dip too. From the peak to the bottom, we're actually down 23%, 23.4 to be exact. Now, a lot of people don't realize this, but when you fall down and then you come back up, you actually move further up percentage-wise. So if you go from 100 to 80, that's a 20% drop, but then 80 to 100's a 25% gain. So a lot of people are actually pretty happy with this jump recently because a lot of people were able to take advantage of this inverse head and shoulders and add to positions, add to longs. And why are we moving up here today? Because there's just a lot of spot buying. Over the last 6 days, the Bitcoin ETFs have bought about $1.2 billion. Yesterday, 236 million. The day before that, actually Friday, 222, 257, 303, 101, 66. I might be talking about how BlackRock's only giving you 48 hours sooner, 24 hours, because they continue to buy. Everyone continues to buy. There's an endless bid right now to buy more Bitcoin. And right now, we're seeing record low amounts of Bitcoin on exchanges. We're seeing an insatiable demand after those 13F filings, and even just after just starting last week in general, we saw a lot of buying, and this leads to big candles, $6,000 candles. Now, of course, we can always see a down day, so just be ready for that, right? We may see the market cool off a little bit, maybe trend sideways before we break to new all-time highs, but so far, I'd say these ETFs are crushing it, especially over the last couple of weeks. There's been a lot of people that have wanted to get their hands on some Bitcoin, and we've talked about that. We've talked about how that was coming, especially when you can see everyone that's bought the Bitcoin ETFs. Like, people get FOMO and people want to buy in. People need to make up for subpar performance, and what do? They go buy some of the best performing assets, Nvidia, Bitcoin ETFs, those types of companies, and those types of ETFs to make up for their lacking performance so far. Grayscale, GBTC ends a long outflow streak with 4 days of inflows. This will also help the market when the biggest seller of Bitcoin stops, and this is something that we smashed over and over into people's brains, I think, over here on this channel, is that when this stops, the biggest seller of Bitcoin stops. And when the Bitcoin miners stop selling because they're actually holding for this next bull run, this is when we go parabolic, and we have moved up a lot so far. And we've also had some liquidations. You can see 117 million in Ethereum liquidations, 87 million in Bitcoin short liquidations. And just the whole market is being pushed up because of some of the shorts being liquidated. Now, not all of these shorts that we see on charts like, what is it? This. Not even all of these are going to be liquidated. So, for example, Crypto Rover says there will be $5.5 billion worth of Bitcoin short liquidations once Bitcoin hits 74K. a lot of the time people think, okay, as soon as we hit 74K, we're going to see 5.5 billion be liquidated. That's not exactly how it works, because some people close their positions early. They might just say, okay, I'm just gonna shut down the trade. I'm just gonna cover at 73K or 72K, right? Or some people might add more collateral and then it gets pushed back to 75, 76, 77. So when we hit levels like this, when we know there are going to be a lot of liquidations at a certain level, sometimes we need to go a couple $100 above, or sometimes there's some funky games being played. Some people try to sell off or try to dump the price right around 74 to kind of save their trade. So really what we need a lot of the time is like a convincing move above this level, maybe $500 or $1,000 over, but we still see a lot of liquidations. So yeah, there are more liquidations coming, more short liquidations. I do not suggest shorting the best performing asset of all time unless you're going to be very careful, but it's like trying to run against an escalator, especially in a bull market. It just probably isn't the smartest idea. You could probably just go with the escalator, which is why I'm always a little bit careful about going short. I don't really short crypto assets very often. But we also have some big news that we should cover on Ethereum. But first, let's talk about WealthChain. Now, we talk about what Bitcoin can do and how you can use Bitcoin a lot, but we don't talk about blockchain technology all the time. But one interesting thing that blockchain technology can do is improve the healthcare system. Blockchain technology has the potential to transform healthcare, placing the patient at the center of the healthcare ecosystem and increasing the security, privacy, interoperability of health data. This is coming from Deloitte. One cryptocurrency that I'm actually watching that is really focusing on the healthcare ecosystem, or just healthcare in general, is WealthChain. So I'm going to leave links to this underneath the video because they are a partner of the channel. They focus on a couple different things. One thing that they're doing is gamifying healthcare. Integrating game elements or NFTs into healthcare motivates patients to actively participate in treatment plans and adopt healthier habits. Gamification through goal setting, earning rewards, and friendly competition proves to be a powerful tool for positive behavior changes and preventative health measures. 90% of healthcare is about preventing problems. And you can get this through the Google Play Store and the App Store right now. And they are using AI. They say that they have an AI-derived patient severity score. They say they're really focused on improving patient outcomes by 15% and helping people save 15% on worldwide healthcare costs. Now, they do have a pre-sale starting about May 19, going through the end of May. They give you a 50% discount. They're planning on launching just a few weeks later, right around June 17. Now, I'm going to leave links to this underneath the video. If you want to check it out, you can check it out. Of course, do your own research. And, you can go follow them, learn a little bit more. Big thanks to WealthChain, and let's get back into the video. Now, the Ethereum Bitcoin chart maybe is turning around. We're seeing a lower high here still. You can see for the last, year and a half, we've seen just a straight down line for Ethereum Bitcoin, but it is up significantly here today. So from the bottom yesterday to the peak, it's up 17%. Bitcoin right now is up 6.5%. Ethereum's up 23.3%. And a lot of that comes down to the news about ETFs. So I would just be a little bit careful, right? If you're getting very excited about Ethereum, we have some big news, but overall, we're still seeing a lower high. Maybe, I guess, the recent local high, like from 3 weeks ago, 4 weeks ago, we're slightly above that. But still lower highs when you zoom out a little bit. So just be a little bit careful of that. But we do have some big news. Fidelity files amended S1 registration statement, removing staking rewards from Ethereum ETF application. This aligns with the other filings, as it looks like the SEC will not allow staking Ethereum. So Fidelity took out the staking rewards part of their Ethereum application. I think they're going to try to add that back in at some point because it's such a big industry. It's such an easy way of making passive income for them. And when you consider if they have, let's say they have $10 billion in AUM and they give, let's say they can get 5% staking rewards, maybe they give 3 or 4%, take a percent for themselves. Now, there will be a little bit of a fight for AUM, I think, with these applications at first. but I think it's going to be a lot less cutthroat than the Bitcoin ETFs. So like there's going to be a little bit more risk with buying an Ethereum ETF that has staking. There's going to be more moving parts. So people will generally go, I think, even more with the bigger issuers, in which case then it makes a lot of sense. Like these companies are going to make a lot of money from staking. So I think they're going to try to add that back in at one point. I mean, even JP Morgan was talking about how big an industry this could be. And that was years ago. They're talking about how it could be a $40 billion a year industry. So they're going to want to add this back in, but maybe they get this approved, get some AUM, then try to go amend it or something. But yeah, I think that's coming at some point. It's too big an industry not to get approved, in my opinion. Standard Chartered also expects the spot Ethereum ETF to be approved this week and predicts 15 to 45 billion inflows in the first 12 months. I don't think it's going to be as successful as the Bitcoin ETFs, but we could still have some demand for it, especially if we turn into more of a bull market, if we continue to move up. You know, there will be a lot of people that say, hey, we missed the Bitcoin rally, the beginning stages of the Bitcoin rally. Maybe we want to invest in some Ethereum ETFs, try to outperform. Maybe we get 100% return. And I know a lot of people say that sounds crazy, but keep in mind that Bitcoin rallied 75% after the spot ETF was approved. Let's say Ethereum follows that same path. Where would that take us? 75% from where we were today. I can't even reach it here. I need to continue moving out. So 75% from where we were would be about just a measly $6,600. Right? Like that is an insane number for a lot of people to think about. $6,600 on Ethereum. But that's bound to happen, in my opinion. Now, I think we have to be careful. We have to be careful a little bit because we've made a big move here today. I don't like to buy when assets are up 25% in the last day. This is the same asset you could have bought yesterday. It's just that maybe more people get access to it, which could change your fundamental analysis of this asset. It could just change because you realize that a lot of people will be buying it, trying to make up for subpar returns. But keep in mind, usually you want to buy when everyone counts an asset out, when no one wants to buy it, which was probably right around here, right? So just be careful. Make sure that you understand what you're doing and make sure that you're not FOMOing in, because that's how you lose out, especially if this doesn't get approved, which sounds like now it will, but in case this doesn't get approved, you'd hate to be holding the bag as Ethereum falls right back down to 3K. So just be careful of that. Now, just zooming out on crypto for a second, I think it's important to remember that there is a massive political change towards crypto that's happened over the last 6 months. And I think that's because a lot of institutions realize that there's a lot of demand and there's a lot of money that they can make from crypto. For example, Tether made more money last quarter than Goldman Sachs. This is actually 2 quarters ago. Tether made 2.85 billion, Goldman made 2.01. Okay, so there's just a lot of money to be made, and I've been talking about this for a while. I cover when Tether makes a significant sum of money, but it's important to remember that institutions want crypto to be approved because they can make hundreds of millions of dollars, billions of dollars, maybe tens of billions of dollars from these Bitcoin ETFs. A lot of people don't even realize all the ways that they can make money. It's not just the 0.2% fee. That's just the tip of the iceberg. They can make a lot more from the Bitcoin ETFs, and I've covered that. There's some sketchy stuff that they can do, but they can also do something as simple as, hey, they put the Bitcoin ETF in a different portfolio that charges a higher fee, right? They charge 1% in a different portfolio, and then they put the Bitcoin ETF in there, and then they can charge 1% on that AUM. And then when the Bitcoin ETF inevitably goes up 2x, well, they make double the fees then that they did initially. So like these institutions want these cryptos to do quite well, especially after they have the ETFs all set up, because then they make a lot of money. They have people, falling over themselves to try to invest in these ETFs because they want the outsized returns. And also, this is good for crypto. At least if you're a crypto holder and you want to make a lot of money, a institutional led rally is going to lead us to much higher prices than a retail driven rally at this point, right? The institutions just have a lot more money. Maybe they're not as degen as retail traders, but they will push up the large assets much higher than retail traders could because they just have significant amounts of money. I mean, there are some institutions that bought 27,000 Bitcoin worth of ETFs last quarter. Like in the first quarter that they were approved, they went out and bought 27,000 Bitcoin essentially through the ETFs. So you want, if you're a Bitcoin trader or if you're a Bitcoin investor and you eventually want to take some profits, or if you just want this rally to go up significantly, you want these institutions to continue buying. This is good for the market, right? And I think as long as the institutions want this, and as long as there are millions and millions of investors that are buying crypto, well, politicians kind of have to lean in and accept the fact that crypto is going to be a big part of our future, or it's going to be a big talking point, and they have to be pro crypto. They have to be pro Bitcoin. They have to be pro innovation, because you're not going to gain any votes by being anti-crypto. Now, maybe a couple of years ago, that was okay because there were a lot of people being screwed over by exchanges, right? It was maybe a little bit, it was more beneficial to be anti-crypto because so many people were quitting crypto in the bear market, right? And so many people lost some significant amounts of money from FTX blowing up and the like blowing up. But now people are making money from it, and people want this to continue, right? Otherwise, if you come out as a politician against crypto, you're basically taking their money away. That's how a lot of people think about it. And they're anti losing money. Obviously, everyone is. So yeah, there's not really a huge benefit in being anti-crypto. So I think there's been a massive political change. And while the SEC hasn't necessarily started to adopt that political change, I think that they will eventually flip to be a little less rigid with crypto. And they will actually flip their script at some point in the future. Now, I'm not saying that's going to happen in the next few weeks or the next few months even, but years from now, we'll probably look at the SEC and they'll be completely different, in my opinion. Let me know your thoughts, though, underneath the video. Do you see this happening, or am I just living in La La Land? Also, there are those links to Margex, to Blowfin, to CoinW underneath the video in case you want to start trading. Again, you can do that at your own risk. I'm not telling you to go out and start trading massive amounts of your portfolio, nothing like that. But you might want to start trying it out a little bit. I've had a couple people reach out and say, hey, you keep on talking about this. Do you think I should do it? And I said, hey, you need to know what you're doing, but I like doing it. And I use a small portion of my portfolio and I leverage it. And I'm very careful about it, but I think it can really amplify returns, especially when we see big rallies. The key is just not to get too greedy and to make sure that it's not anything that you can't afford to lose. Let me know your thoughts, though, underneath the video. Thank you so much. I appreciate it. I will see you in the next video.